Hi, this is Matthias Rybak and I'm going to analyze the two European airline stocks, Ryanair and Lufthansa, based on the Credit Suisse HOLT Valuation model. Lufthansa is a full-service carrier with a fleet of about 600 diverse airplanes that fly to destinations all over the world. Ryanair operates a very different business model as a low-cost carrier with about 300 planes and focuses on destinations in Europe. Looking at the relative wealth chart of Lufthansa, we see that there's been shareholder wealth destruction for pretty much of the last decade. On the asset side, there hasn't been much growth, which is positive. Instead, dividends have been paid out. If Lufthansa would have reinvested much of the cash flow, even more wealth would have been destroyed. The market prices an even lower cash flow return on investment going forward. Ryanair has been creating shareholder value for most of its history, and the market expects this trend to remain. The growth of Ryanair has slowed down somewhat over the last years, with the last big acquisition of planes in 2014. The market and Credit Suisse HOLT expects a growth rate of about 5% going forward. This is exactly the right thing for Ryanair to do, since it generates higher returns on investment than the required rate of return. So growing the asset base creates value for the shareholders. One reason why it's much harder for Lufthansa to generate the cash flow return on investment above the required return is because Lufthansa uses a higher leverage, which increases the risk, which in turn increases the required rate of return of bond investors as well as equity investors. When we dig deeper and decompose the CFROI, we see that one major problem of Lufthansa is the margin. The reason for this is Lufthansa's unfocused business model, where they operate in too many different markets without being the leader in any of them. With regards to asset turns, Lufthansa has a slight advantage because they operate several businesses that do not require a lot of investment, for example the maintenance business, where they also maintain planes for other airlines. Sales growth will be a hard thing to do for both companies, although we see that Ryanair can still lower their margins in order to fight for more market share, whereas Lufthansa is already pretty much at the zero of margin. The scorecard of Lufthansa tells us pretty much one thing, which is that the stock is cheap because Lufthansa operates an inefficient and unfocused business model. As long as we don't see a change in strategy, this is not a value investment but a value trap. Although Ryanair's overall percentile score is about the same as Lufthansa, I'm much more convinced of an investment in Ryanair because what we get is a focused and well-operated business model that generates cash flow return on investment above the required return with sustainable prospects going forward. The low score on momentum doesn't bother us too much because the long-term story remains intact. As a result of the analysis, I assign an underweight rating to Lufthansa, with the main reason being the unfocused business model that Lufthansa keeps operating, as well as the high leverage that is used compared to its peers, which makes it even harder for Lufthansa to get the demanded CFROI level. So as long as there is no turnaround in sight, we want to stay away from the stock. For Ryanair, I assign an overweight rating because of several reasons, one being the focused business model that is operated with high efficiency, as well as the further room to grow from a market share of about 15% today, with internally generated cash flow, meaning that they don't need to take on more debt in order to grow, but basically they can finance it with their own cash. Thanks for watching, and thanks Credit Suisse for hosting the evaluation challenge. I hope I can keep my HOLT Lens account a little bit longer.